Welcome, everyone. You're here and on a panel on the role of green bonds in the net zero transition for both the Climate Investment Summit and the Climate Bonds Conference. Whichever one you're coming through, you're in the right place. Here to speak on the topic, we have Samantha Sutcliffe, who works in managing sustainable finance for UBS, one of the world's largest banks, certainly the largest high net worth individual focused bank, and Anders Schelde from the AkademikerPension in Denmark. For those of you who don't know, this is a pension fund that has about €20 billion of assets under management, 145,000 members. It's a lot of people to manage and is the 11th largest pension fund in Denmark. We're going to explore this issue of what is the role of green bonds. Samantha, I'm going to ask you to kick us off. You've got an illustrious history working in this space, if I'm allowed to say so, SEB beforehand in Stockholm. For those people who don't know, Sweden is currently the largest per capita issuer of green bonds in the world and was a leader, the AP funds in particular, and were the most important investors in the early stages of the market 10 years ago now. And SEB, where Samantha used to work, was a pioneer bank. But of course, now you shifted over to a much bigger pond. Tell us how you look at the moment the role of green bonds, the net zero transition.
Yeah, no, thank you so much, Sean. And I think it's such an interesting topic, and I think the green bond plays such an important role in the bigger picture of the transition towards a low carbon economy. In particular, I would notice that we think of green bonds often in the terms of use of proceeds, but I think when you actually work together with companies and helping them set up the governance behind the frameworks and the green programs that they're working so hard on, you can really see how the process is affecting those institutions in a really positive way. It can, bring people together within the organization. It can really sort of increase that agility when it comes to sustainability and driving that agenda forward. So I think that's the part that gets a little bit lost sometimes in terms of the real impact of green bonds. That is an absolute pleasure to see, and I think that's an important point to raise here.
I guess that's a very important point to make, because often people say, but hang on, you're funding a solar farm. What's the additionality there? How does it work? But bonds are primarily a refinancing tool. People need to understand that. They're not actually a project financing tool as a rule. And if it was a solar farm built last year, it's still a solar farm. But of course, it's, as you say, the collateral benefits that are the really interesting part of this, the organisational change that comes with issuance and so on. Are you finding new clients at UBS that are being aware of this and getting excited about this prospect? Is that change underway?
Yeah, I think we still see companies on different side of the spectrum, often smaller companies that don't necessarily have the capabilities and in-house capacity to pay too much focus on this or have in the past, can really take help of the green bond to break that down into tangible parts and address those issues and then build that sustainability story up. So I think that's a really exciting to be on those journeys together with many companies.
It is a journey, as you say, and Anders, you of course have also been on a journey in building up your green bonds exposure, and I understand you've got big plans. Tell us more about that journey from your perspective.
Absolutely. Let me just say, I think it was a really great point you made there, Samantha. It's not just about getting capital to flow towards the green transition. It's very much about this also being a catalyst for change inside the companies. At our company, currently we have invested €500 million or so in green bonds. We set a target for a total allocation to assets related to the green transition in 2030. And we foresee that green bonds will be a quarter of that allocation, some €2 billion, some 3% of the portfolio. But actually we are in the process right now of adjusting that target. It's been agreed by the board in principle. We just need to get it formally agreed, and we'll actually top it up and make it twice as large. So we plan to allocate up to 6% of the portfolio to green bonds in 2030.
That's great. So that's fantastic news. So as the market has grown, And for our listeners out there, we expect the green and sustainable bond market to hit about $2 trillion outstanding this year. The annual issuance will grow 80% this year compared to last year. That's pretty rapid growth. That means a lot more investment opportunities. So presumably, Anders, the increased universe has allowed you to do more of that and to deal with the allocation challenges and diversification challenges.
Absolutely. It's so much easier to meet those targets now, and that's also one of the reasons that we adjusted our target, is that we've seen this phenomenal growth in the market. So we can see that we can simply allocate a bigger part of the portfolio without any problems at all. That said, I would say, I mean, they're still trading at a premium relative to comparable bonds, so that I guess there's still not enough of them to go around. But over time, I guess that premium will also wane.
Indeed, although one of the things that we're seeing, because we, as you know, publish regular reports on pricing in the market, is that the value retention characteristics of the product seem to be slightly separate to just the scarcity issues. So even when you've got adequate liquidity, you've still got, in downturns, value retention for the green bonds compared to vanilla, which increases, of course, their secondary market value, which hopefully is a very positive thing for a portfolio like yours.
Yeah, absolutely. I totally agree. Yeah.
And add a bit more differentiation as the market continues to grow. But Samantha, is this a similar story? Do you see a lot of investment clients and some of your clients on the asset management side? Are they growing in the same way? Is this a story that everyone should get really excited about?
Yeah, I think so. And it's sort of moving, not necessarily away from green bonds, being sort of an old school green bond participant in this market. I know that the transitional story and the strategy has always played a really important role, but I think that's the component that has been brought up to the forefront at the moment. And this is what investors are really looking for. And again, I think, sustainable finance is just such a good way to capture that for the investors.
So the role of green bond as a transition is clearly shifting allocations, and while bonds are used as a refinancing tool, of course, easier refinancing for green, competitive and attractive refinancing green, then stimulates more projects. We've got that benefit and more asset creation, let's say. But let's go back to that organisational aspect again that you mentioned, how it changes internal culture, dynamic and understandings of that. And has this been a factor in your fund and also in some of the bonds you've invested in? Do you see this as being real? I mean, or is it a straightforward asset allocation story in terms of your own experience, putting aside what might happen in some of the issuer companies?
Well, we've certainly been on a steep learning curve over the last couple of years in general in regard to how to invest into green assets, so to speak, and then also in regard to green bonds. So going back a number of years ago, we didn't have much exposure to green bonds. The market was not so big either, but we were sort of dragging our feet a bit. But over the last couple of years, we sort of got up on the learning curve, which also has to do with our members being very much focused on this agenda, and we have a bit democratic business model. So of course we have to listen to what they say, and there's a very strong voice there saying that they want us to support the green transition, and they want the portfolio in general to be in line with the goals of the Paris Agreement. And of course, green bonds is a cornerstone there.
So that's very interesting. So you've actually got a member demand aspect to this whole story.
Absolutely. At our last AGM, we had a big debate whether we did enough. And with that, I'm sure that debate will continue also at the next AGM and so on. This is something that's very big in our member base.
I mean, as someone who works to promote investment in climate change solutions, that's very exciting to hear that ordinary pension fund members are engaged in this topic and beginning to appreciate the story and appreciate what has to be done. Samantha, back to you. In terms of the benefits of green bonds, you've also seen a lot of issuance in sovereigns in the last couple of years. Do you think that's been material to try and develop more receptiveness among sovereigns to do more climate activity? What's your reading? I mean, Sweden's done one, for example.
Yes, no, absolutely. And I mean, I think it's sort of a two-part answer to that question. On the one hand, you see the sovereigns and the countries really taking that responsibility and showing the way for the private markets as well, and not sort of just talking the talk, but actually walking the walk as well. And I think that's helpful for perhaps the wider market and those who are perhaps still pondering around sustainability and ESG and are not as convinced as some others. But I think it's a good way to promote sustainability and ways that you can actually act upon strategies and solutions for the country.
And as we've yet to see Nations Bank actually do a sovereign. They've talked about it, but of course their bond issuance program is not that large. So that the Danish balance sheet is a very healthy balance sheet from that perspective.
Yeah, that's a problem.
That's a problem. But you've also seen issuance in other currencies happening around you in Europe, in Netherlands, in France, in Germany, Belgium, and of course Sweden. Is that? Do you have an exposure to those sovereigns, and is that a useful development from your perspective? And do you think it's
yeah, it's a global portfolio, so we have exposure in Swedish green bonds. We were in the Dutch one and switched to the German one, and we have some Danish exposure from some of the mortgage institutions. We have some emerging market exposure also, so it's a quite diversified portfolio.
And in the conversations your teams had with the sovereigns and purchasing, do you see that that it's fruitful? Do you think that the treasuries are actually engaging, taking this seriously, doing something with it, or is it just window dressing?
No, I think it's no, it's not just window dressing. It's
okay.
Real, I would say. Yeah.
Okay, so that's a really important part for our audience to note, because of course one of the worries of many commentators is that this is window dressing rather than real. But I think that's what we've seen too, is that when we speak to issuers around the world, they often talk about the internal change and so on. And I'm going to say, Samantha, one of the things when we've spoken to bankers around the world who've been working green bonds, I can remember one banker telling me a few years ago in London that for the first time in his life, his kids were interested in his work.
Yeah. It's not unusual, I think. I think the younger generation is definitely more in tune on the topic than perhaps us in a natural way. But I think you're really making a good point there as well, because in my work I really feel that issuers want to do the right thing. Some might be more advanced in the strategies and that might come across as sometimes a stronger framework and vice versa. But it's, again, I think most of the time you have that want behind to do the right thing.
Which brings up something we're working on at the moment, which is the transition framework and tackling high carbon sectors. I'm going to say a bit like Ørsted was 15 years ago or 10 years ago, when it still was very much a high carbon company in the process of shifting to a wind energy company. Now, of course, it's I think the world's largest wind energy company. We're looking at how we tackle coal, not so much coal, sorry, oil and gas, steel, cement, chemicals, because we need these things going forward, but we need them to become green. And I think Maersk is quite an interesting example, which is essentially a high carbon shipping company that is now committed to very low carbon energy sources for its future ships and changing its fleet. Now, Anders, if you were to invest in a Maersk bond now, it would actually blow out your carbon tracking. Yeah. But of course, if you're investing in a company that's pushing through the transition, that's a positive thing for climate going forward. And we're thinking of this discussion. This is something that we're looking at now, is about how you recognise companies that have got an appropriately ambitious transition strategy. Yeah. It's got to be appropriately ambitious. You can't have something that's going to take the 2060, etc. And start including that in this universe as well. Do you think, I guess from your perspective, Anders, that that's a development that will work with your portfolios and your members you've been speaking to?
I think as an investor, you need to do several things. On one hand, you need to identify the investments that you think will do particularly bad during this very much needed transition. And when we've done that, that has actually led us to exclude most of the fossil fuel companies. So we don't own any of the oil majors or that. Then you have to think about, what's your role in making the transition happen? How can you help provide capital, and where are the good investment opportunities in that? There, I think the green bonds obviously is a very important area. Mm-hmm. And then the third thing, or maybe there's 4 things that you need to do. The first thing you need to do is that you need to think about, okay, what do you need? How do you then manage what you have invested in total? And do you see that transition happening fast enough? So are Maersk and the other companies transitioning fast enough? And that I think you need to address by, for instance, do as we did, set up targets for the greenhouse gas emissions, how to reduce them in your portfolio, and make sure that those targets are aligned with those of the Paris Agreement, and that they're not just, we want to be net zero in 2050, that you also set interim targets. So we have an interim target for 2025, and we need to reduce the emissions from the portfolio with some 27% in order to stay on the path towards the goals of the Paris Agreement. And that also of course means that Maersk and other big emitters, they need to do something, and we are in dialogue with some of them, some more than others. In particular, Maersk, of course, because it's a Danish company, so there we have the lead through the Climate Action 100 dialogue towards Maersk. Mm-hmm. So as you just pointed to, they're really taking this very serious, and it's something that, as you alluded to, Samantha, that's become very sort of embedded in how they think about their business. So that's a very positive story.
Has this transitions thing been an important part of the work you're doing, Samantha, so far?
Yeah, absolutely. I think it's, it's underpinning everything. But as Anders is saying, there is a level of complexity to it, and it sort of requires all participants really to be able to kind of incorporate that and understand what they need to do, and perhaps not be afraid of having a little bit more carbon intensive portfolio than perhaps they necessarily would have if you sort of divest straight away. So I think it's a very fine balance there, as Anders was saying. And sometimes I feel on the company side, the stigma over the label transition, maybe the misperception is that such a framework would be less robust. Yeah. But in essence, you could actually argue that such a framework would potentially reduce the absolute impact more than a green. So I think there's a little bit of a stigma there to overcome.
I mean, hopefully, as we can come up with trajectories that are in line with achieving the 1.5 degree target. Yeah. And for those of you that are at the Climate Bonds Conference, we've got a session on Thursday just about this with representatives from Climate Bonds Transition Pathways Initiative, CDP, SBTI, and Rocky Mountain Institute, talking on this question, how we can collaborate to provide the tools for UBS and AkademikerPension to be able to make the decisions they need to make going forward. But we do have to tackle this stuff, don't we? Because it's a matter of getting to X. It's not a matter of a linear transition around carbon. We've got to shift stuff fast. And that is challenging. But of course, the only reason we can have this conversation, the only reason that there is the opportunity to talk about transitions is because we've been able to prove the point about investor interest through the green bond market that has now grown so much, has become large, liquid, it's created an industry, and now gives us a chance to tackle our issues. Samantha, you must be very proud of the work you've done over the last few years, I have to say, to grow this market.
Thank you, Sean. No, it's been an absolute pleasure to be on this journey, and of course, you are one of the pioneers here as well. And just to see how the conversation has changed, and as you say, it started in Sweden. And I was lucky enough to be there, I'm just curious to see where it leads us next.
Which, Anders, I think is a question for you. If you look at the broader market, where do you think this does lead us? What do you, when you read the tea leaves of the future, where do you see this going and developing with the learning you've got in your fund, but in a broader fashion?
Well, obviously, over the last couple of years, growth rates of the green bond market have, of course, been phenomenal. I think it's like 60% per annum or something. Of course, that cannot continue. But it will be double-digit growth, I'm quite sure, even if you make sort of very sort of conservative assumptions about the speed of the green transition. Mm-hmm. The amount of capital that we need to get towards that transition is just so, stunning. So that it will be double-digit growth rates, I'm quite sure, certainly outpacing the overall bond market. So future growth is what we look into.
So it's a story of growth you can see. Samantha, it's a story of growth you're trying to engineer at UBS. But of course, the background is that we have issuers coming to market in scale. I mean, we've got sovereigns in Europe in the last couple of years, which have added huge bulk to the market. And then we've got the European Commission coming to market in the very near future with the beginning of a 225 billion euro issuance program, which is really exciting. So stuff is happening. And now we're waiting to see whether there'll be a US green T-bill coming out sometime next 12 months, because they're an at-scale issuer. And the readings from Washington, D.C. are positive about that. So issuance is going to grow. Yeah. Will investment appetite grow? You mentioned, Anders, that you're not sure that the growth rates can continue, and you're not sure that the pricing issues, the value retention, will stay. But if we keep seeing different investors increasing their allocations like you are in the next few years, it sounds like both halves are going to keep growing, issuance and demand.
Yeah, I'm quite sure that we'll make that go nicely hand in hand to the extent that we no longer really think so much about it. It's just, a very big part of the bond market that we all invest in.
We're coming to the end of our session. I mean, clearly there are some immediate material benefits. We've talked about the pricing benefit that issuers are seeing in euros and US dollars already, thanks, I'm going to say, to the value retention characteristics in the secondary market. It's a very clear-hearted. It's important to note that, because whilst investors are very keen on it, they still have to earn a return for their pensioners and for the insurance funds for their insurance clients. So it's not going to be so easy as an individual investor to take a haircut for the planet. Working together, of course, to try and change the enabling environment is one of the features of the last couple of years, the Netzero Asset Owners Alliance, the Climate Action 100 Anders that you're part of. How has that been, and how fruitful do you think that exercise is at the moment in terms of achieving change?
I think it really has a lot of momentum. I think a lot of investors are waking up, realizing that it's something that they also have a role to play. And I think many investors like us, who also have already been active in this, are a little stunned how much you can actually achieve. I've certainly been a little stunned that we were able to get, into dialogue with the top management of Toyota. After all, we're just a small Danish pension fund, but nevertheless, we did that. So I think there's a big role for investors to play here, and increasingly we're doing so.
So that is a very positive movement. And Samantha, I would posit that if we didn't have the growing green bond market to prove that there's investor demand, it would be harder to get the coalitions around this, because this shows that it's a positive investment stream. It's not just a stopping stuff. It's we can make these changes, we can grow the opportunity for positive investments. But I don't know, that's my thought. Does that make sense to you? What do you think?
Yeah, no, I think it does, absolutely. And I think, we should not underestimate the role of the green bonds. It's really allowed, as you've said, the development also into other sustainable finance products. And for me, I think it's just an instrument that allows companies to execute on their sustainability strategies. And that's maybe that's where I leave it.
Yes, exactly. Something to execute that will make a real difference. So to our listeners out there, you've heard a great story from Anders, from an individual fund, but I want you to note something very special about what he said. It wasn't just a story of managing the portfolio and increasing allocation. It was also a story of combining with other asset owners and fund managers to achieve change collectively, which is the feature of 2021, I'm going to say. the coalitions that have been launched, this is a really important story. You've heard from Samantha talking about, from her perspective, growing the market and the benefits of this going forward. We know there are benefits way beyond the actual bond issuance program. It's about creating a change in dynamic. I would say, and please correct me if you disagree, Samantha Anders, but one of the main benefits of all of this is that we've proven that investment in climate solutions is not a loss-making game. It's a returns game. We can get returns, strong returns and good returns, safe and solid. And that has been a credible conceptual shift in the last 10 years. Anders, would you agree with me? Absolutely, yeah. So returns are there, and that means the capital will also be there. And that's the purpose. That's what we need to achieve. I agree. That is not something to be sneezed at in terms of raising the sense of opportunity about addressing climate change. We've got to invest something like 90, possibly $100 trillion in climate solutions of all sorts in the world between now and 2050, according to the New Climate Economy Project. That's a big pipeline. If we can ensure, as I think we can, as we're showing we can, that this will be an opportunity to get good returns as well as a sustainable planet, then what's to stop us at this particular point? So thank you for joining us on this session. For all our listeners, you're at the Climate Investment Summit or the Climate Bonds Conference. This is an unusual affair. This is a joint panel presentation in both conferences, an example of the cooperation that is now suffusing the whole green finance industry. We're working together across funds, across banks and pension funds, as well as across NGOs like ourselves, to achieve change, knowing that we can do this, getting good returns as well as create a more sustainable planet. That's the golden prize. Thank you so much, Samantha. Thank you so much, Anders, for your work, for helping to create a sustainable planet and for being with us today.
Thank you so much.